up and move around, use the bathroom if you need to, get water. You know, there's no restrictions on any of that because we might go 3 hours, 2.5 hours. We'll try to wrap up before 8, and you guys are welcome to, stay around for drinks and dinner afterwards, or, just do what you want. Mario, you ready?
All set.
All right. I'll get this going now. So I'm going to be recording today because Mohammed are leaving early. So I'm going to try to do a bunch of things at once. Just bear with me.
I'll be heading out with them just to get them validated downstairs, and then I'll be back.
Sounds good. All right, we're going. Okay. So I'm going to start off with some fun. Okay, disclaimer. Yeah, welcome to the investing group. Nothing here is investing advice. Invest at your own risk. And by being here, you agree to be recorded and photographed, even though we're not doing pictures today. And yeah, let's have fun with this. All right. So should we start with the go around the room? Other new people. All right, let's go.
All right. My name is Mario Sanchez. My background is in architecture, so not finance, and I manage all of our multimedia services, at least on the recording side. Housekeeping, if you leave early, don't knock over the camera and speak into whatever microphone's closest to you for best audio quality.
All right. Hi, everyone. My name is Mohammed. I've been at the comedian since its inception. I've become more active in trading as a result as well. I graduated from UIC in 2024 with a major in biological sciences, and I am currently an incoming 1L at University of Illinois College of Law. On the side, I am running my own startup in healthcare, which has been really fun and extraordinary to do. So yeah, excited to be here and just engage in this discourse in person.
I'm John. Nice to meet you guys. I'm here to listen and learn from you.
Hey, I'm Yao. I just graduated from U Chicago, and this is my first time here. Nice to meet all of you.
Welcome.
Thank you.
I'm Toby. I also just graduated from Chicago undergrad, and so my first meeting, excited to meet everyone. Yeah.
Which school, Toby?
Yeah. I studied economics.
Which school?
The college.
They're both at U Chicago.
Of
University of Chicago Economics. Got it.
Yeah.
Okay.
So, but now I play around with AI agents, and that's kind of the context where I met Eric, who I introduced.
You're in a good place.
Hello, everyone. My name is Caleb. I'm a recent UIC graduate as well with a bachelor's in finance. It's my first meeting, so excited to work with you guys and learn a lot.
How you guys doing? My name is Jose. This is my second meeting. I also graduated from UIC with a bachelor's in finance, and I'm excited to learn from everybody. Everybody has a different perspective, and I'm here to listen and just grow.
Hi everyone, my name is Moses, also just graduated this past May from UIC, degree in finance. Like everyone, here to learn, here to contribute wherever I can. Mostly just hear everyone's ideas, thoughts on things. So yeah, excited.
Hello everyone, my name is Suryansh. I'm a sophomore at UIC, just got done with my sophomore year, and I got to know Eric through PNT. And I'm just really interested to know more about finance and everything else that surrounds it.
Hey everyone, I'm Seamus. I've been coming here for a couple months now. I got to know Eric through PMT as well, where I'm a sector leader. Yeah.
I'm Ryan. I'm graduating next year from UIC, and I do some website design and trading on the side.
Let's go to Mohammed.
Hi everyone, my name is Mohammed. I'm 20. Got into investing around Liberation Day. Recently been more into trading, and yes, we are brothers, but always exciting to hear the discussion here.
Hey, Diana, everyone. Paralegal at immigration law firm. Super excited about finance, investing, and look forward to just sharing more about this. Yeah.
I'm Raza. I work in television news and have also been a labor leader. I've always been fascinated with AI in terms of what it's going to mean for our workforce. And I just love the way Eric runs things, and it's an interesting conversation and dynamic whenever I'm here. So it keeps me coming back for more.
Hi, my name is Jamie. I'm a member here, and this is my first meeting. I met Eric at one of our networking groups. I'm a director of accounting at a credit union, and I'm just eager to learn more about investing and options trading.
Welcome.
All right. My name is Eric Simpson, and with John and also Victor, who's not here, we started this thing, and we're just having fun with it, seeing where we take it. I trade stocks for a living. I live and breathe stocks and investing in general. So we're gonna dive into things. We're gonna use AI, and we're just gonna, figure out the best edges that we can find. All right. So let's start off with some fun stuff. It's been rough as a trader. It's been rough in microcap land, especially on the long side lately. But that makes for some good stories. So this past week, I think this was on Wednesday, ICCM. So this is Thinkorswim, Think Back. Highly recommended if you're crazy about like researching historical charts on stocks, Thinkorswim, Think Back. And so this was Wednesday, the 17th, I believe. And ICCM, some of us were longing it, somewhere around here. Around here, kind of trying to get this momentum breakout. It's an Israeli company. For those who don't know, Israel and China tend to have a lot of small cap scammy stocks trading on US exchanges, so they can run these legal dilution scams. And there's a lot of PR pumps that go on. ICCM was one of them. And it looked like it was about to run like crazy, and sometimes it happens, but then they announce, what was it? $5.5 million private placement type of share offering. So dilution, the combined price of $3 a share, it didn't quite tank to $3, interestingly enough, but this whole candle right here kind of screwed us, and especially me. And kind of snap back, whatever, I was out, but that's just the nature of it. That's the risk you run when you play with microcaps. Like, these crazy rug pull moves happen out of nowhere within seconds. You have no time to get out. Like, it's just boom. They announce a PR, they halt it down, volatility halt, that happens. And then, to add insult to injury, the very next day, CRVO, which we did do well on, I think, a couple days before that, but this one, same thing. Might have been the same, who knows? You'll never know who these pumpers are, but the same idea. It looked like it was going to run, and then all of a sudden, massive offering drops from 7 down to like 4 within minutes. I mean, volatility halts. You can barely add orders to get out. I think I got out around 6-ish maybe. But like, this thing just, another offering, scummy offering. HC Wainwright, I'm not gonna like name, accuse anyone of anything, but they're kind of this small boutique investment bank that's kind of, synonymous with, there's just a high correlation between these types of things and certain investment banks. I'm just saying. So yeah. 2.5 million shares at $4, a $10 million offering, price at 4. This thing actually did tank to 4, so not fun. It's very rare to have back-to-back days of offerings on small caps, but it's one of those tail risks that will happen. So it's been a very rough past few weeks, I think, because the S&P is kind of like, it had been running, and then it kind of like ran into some chop, and then usually with small caps, the trading action gets a little wonky, and then these companies will take the opportunity to raise capital via offerings when their share price is pumped and they see an opportunity. So it is what it is. It's just been a rough stretch for small cap trading, but these things come in waves. So just a fun thing. Does anyone have questions on this, or should we move on to the main topics? Okay. Let's move on. And of course, we have to start with Iran. I'm sure you guys have seen the headlines, and it's kind of been all over the place in the market, and how the market's been reacting has been kind of, wishy-washy. It hasn't really been tanking lately. But there's a lot of back and forth. Has anyone been dialed in? Mohammed?
Yeah, I mean, I think their most recent discussions, I think in Switzerland, have gone pretty well, which is what signaled the oil price to decline a little bit. I think they're at a point now where they're really negotiating hard. My consensus is that Trump wants out. He's sort of, from everything he's been saying, especially his newfound criticism of Israel and his leadership, I think they're now at a point where they're like, okay, we got dragged into this conflict based on the premise that when we take out the leadership and assassinate the Ayatollah, it'll cause a societal collapse where the revolutionists would take over and reform the country. Clearly, that has not happened. So now they're like, okay, well, that didn't happen. We, depleted so much of our military resources while doing this, and now they're looking for a way out. So, I think I wouldn't be surprised if in the near term we get one final agreement.
Yeah.
But what we'll be telling is, will that agreement be substantially better than the 2015 agreement that Obama signed, or will it be worse? So far, it doesn't seem like there's much of a difference.
Yeah.
But we'll see how it develops.
So they signed that memorandum of understand. They signed a thing to like sort of approach ending the war. I don't know if it really means much, but okay, committing both countries to a final deal within 60 days. The key thing was that the strait reopens and the sanctions on Tehran get lifted by Washington. Okay, Iranian president published the document on X. Tehran is publicly framing it as the failure of maximum pressure. Okay, oil minister saying the push to zero out Iranian exports never succeeded. Okay, so just more back and forth. Yes, they had a round of talks in Switzerland. Seems like not much came out of that. There's some video, I think, circulating on X, Twitter, with the sort of them not really agreeing on stuff. And I think the vice president, Vance, was there. So yeah, just more of the same. What's interesting, though, is that the market reaction doesn't seem to be very severe. The S&P is not like crashing or anything like that. We're not having the moves we had, earlier in the year on this. And oil, like crude futures here, low 70s. I mean, it was hovering around near 100, when the war was first going, and now it's so it's like the market, or, how it's pricing things in. And remember, markets are forward looking, it doesn't seem to be taking the war as seriously as it used to, and I think it's all based on the strait being open. And it seemed like the strait was opened, and there was sort of traffic moving through it. But then the Iranians closed it, or said they closed it back, and I don't know if has it been confirmed?
It was closed, but I don't know if it was reopened.
Okay.
Yeah, if I'm not mistaken, it was open, and then I think Israel broke a ceasefire term for it to be open, and then they reclosed it again.
Okay. So yeah, we'll see. It seems like based on what oil's doing, staying down here, I guess it's still pricing it in as if the strait will probably be reopened soon anyway, But obviously if it doesn't, then it could shoot back. So that's something to keep an eye on. I think, I wouldn't say safe to say, but probably if you're just thinking about it relative probability wise, I would say we're definitely past the peak of the conflict, at least market wise. There's a lot more questions on the stuff for Iran and how they rebuild and all that, but at least market wise, from a market view, we're past sort of the main shocks, it seems like. Anything else on Iran before we move on to the next one?
My take on it is, it's like the little boy who cried wolf. You can only do that so many times before people stop reacting to it. So whether we continue in this situation for months on end or it comes to a close, the market just seems to want to move forward. People the FOMO aspect of, we've got to get on top of these stocks that are breaking into new highs all the time. Mm-hmm. It's a little disconcerting that the market doesn't care about these things. So I think we need to be wary and alert. We should be watching, the news for the more substantive type of thing that could really turn the market, down.
Yes.
Yeah. Until that happens, it's just gonna keep doing, a little bit higher, I think. That's my sense.
Yeah. And it seems like now we're returning to more of the AI related stuff. There's also, we can talk about this next actually before we get into that. Fed, the new Fed chair, Kevin Warsh, they just had their first meeting with him as chair, and rates were unchanged as expected, unanimous vote. So it makes you wonder because the last Fed meeting, it was like an 8-4 vote. There is some dissenting, and I don't know if that was sort of a performative signaling thing, but it seems back to unanimous. However, the Fed, some of the members, I guess, signaled or indicated that maybe they need to hike rates, like 25 basis points, sometime before the end of 2026. So there's a chance that we could be dealing with this inflation stuff, and that would obviously affect the consumer stocks and those types of things more. But we could be dealing with inflation for a little longer than expected. I think we can dig into the poly market odds, because we were looking at that, how that was sort of responding. And poly market, again, mentioned before, it's not like perfect, but usually prediction markets are a good sort of gauge, because people are putting their money at risk. And so it kind of, you can get a good, okay, so rate hike in 2026. Yeah, so 57% chance seems like. Okay, so it's kind of been gradually creeping back up. It did come down, and then the last meeting was a little more hawkish, I guess, because of that new indication. So now we're up there. So if anyone wants to bet this, or is interested, could be an interesting binary type bet close to it. Does anyone have thoughts on this, on the Fed and inflation in general?
We got an RIP Greenspan in the chat.
Oh yeah, Alan Greenspan. Yeah, he passed away, 100 years old. So, all right. I don't know. I mean, that's, it's a long life. So, okay, but yeah. Anything else?
I mean, I think the general consensus is this is Warsh's opportunity to establish himself.
Yeah.
And I remember going into this, there was a lot of commentary about whether or not they were just blindly listening to what President Trump would want him to do in terms of rate cuts and kind of taking perhaps extreme measures to deliver short-term gains. But I think through his press conference, he's shown that he's gonna stay independent at least. So
yeah,
at least for now, we can at least be certain that he'll operate the ship as needed.
And that's what you want in a Fed chair, really. You want someone who's just gonna not be too extreme, and seems like just more of the same, similar to how Powell was. He's not gonna just give in to what the president wants or says. And I think that's fair. And, I did listen to his speech. I mean, it wasn't like anything unusual, but that's a good thing. That's kind of what you want. You want stability, if anything, through Fed chair. So we'll probably get a little hike and then maybe some lowering maybe next year and then the year after. But, this thing will be drawn out. I think with the markets and how it reacts, I mean, the S&P hasn't really, it's interesting because I think we mentioned this last meeting, but the market weights now are quite different than what they were 30, 40 years ago. It's much more tech oriented, and it's not as consumer, utilities oriented. And it's not as I'm not gonna say it's not rate sensitive, but probably not as rate sensitive as it used to be many years ago. But it still is a factor, so we'll just see how this keeps going.
Fed Watch from the CME group tracks what the futures are doing, right? For what they are pricing in hike wise.
Let's take a look here.
So I
Okay.
think I read that, or they're saying online that the
63%
B of A
chance.
analysts are pricing in 3 hikes for the rest of the year.
Interesting.
The 52% chance of a hike in September, according to that.
Mhm.
Some of you may be too young to remember Alan Greenspan, but you'll probably know the phrase irrational exuberance.
Yeah.
That was him. He had said that. And his moves as Fed chair set the stage, didn't cause, but set the stage for what happened with the subprime mortgage debacle. So there's the dot-com bubble that happened under his reign, and then Bernanke came along with subprime mortgage, and he invented quantitative easing. So you can see, and then he made moves, so these guys have enormous effect on the entire worldwide economy with the decisions they made. And I think Warsh is probably gonna cool his jets for a little while, for at least, whenever you take over a company as a CEO, you come in and you observe.
Yes.
For a while. You don't make major changes until you know who's working on your side and who's not. So there's a quiet period, I think, right now, which I like, because we're going into the midterm election period. We don't need more turmoil thrown up. So I'm happy that Warsh is laying low at this point, playing his game.
Yeah. Anyone else on the Fed before we move to the next topic?
I have a question.
Yeah.
So you said over time, the companies and the stocks overall have been less influential to the news and the interest rate changes. Why do you think that trend is going on? And do you think it would increase over time?
I wouldn't say it's like a huge difference, but I would say because the market is more tech weighted, I think it's like high 30-ish% now tech, and sorry, that's my phone. And I mean, everything is kind of like downstream of that too. So it might be even higher if you think about it in terms of second order effects. But, the Mag 7 is driving things. The Mag 7 is big techs. Yeah. And so if you think about the S&P 500 and what the weights are, it's just more big tech. And these are not companies that are sort of like, say, for example, it's not like a brick and mortar retail, where it's extremely like, say, low margin, and then you're even more rate sensitive, like the slightest changes and the cost of borrowing is going to affect you even more. No doubt it affects everyone, but like, I'm just saying, like, if, say, we were back in the old days where like Sears was one of the biggest companies or something, this would be a much bigger impact market wise. But not to say it's not an impact, it is, but like, now instead you have these you have Google and Meta and those types of companies driving things. So it's just market weightings are different now. But, so it still has an impact, but again, doesn't mean it's just, I don't think it's as much of a drag on the overall market because of those weightings. So it's just something to think about. Anything else?
Fair. And so given that the tech drives the market, which I agree, and as a result, it's less influential with the interest rate changes. But don't you think it would, only for like this specific time in the history, it would like be more influential to interest rates, because all these tech companies, especially hyperscalers that drive the market, are raising capital, and because all of their investments, and like we've had Google raising capital, ChatGPT. All of them are raising capital through all these seed rounds.
Yes.
So would you think that it would play a much more influential role right now than as compared to before?
Really depends on how the market's pricing it. And that's a lot of unknowns we're dealing with.
Fair.
It's up for debate, because you can make an argument that, and I'm sure these big techs have a lot of internal research because they have some of the smartest people in the world working there.
Sure.
That, okay, we need to increase our CapEx more and more because it's going to be beneficial, because the new businesses and will be built on the AI framework and such. But obviously, publicly, we don't know, because we don't have access to that information. But we just have to trust that, like, that's probably the case. But again, it is the great unknown. So it is a big question. And the market has sort of like it's kind of oscillated between like just running on that hype, but then also kind of wait and see, because again, that value add, it may take years, you know, but they seem to have no problem just spending more and more and more. So again, we'll see what happens, but yeah, a lot of unknowns.
Next.
Yep.
The other thing.
Yeah.
The other thing I think might be worth mentioning is as we see tech grow in its percentage of the market, we also see it begin to deleverage over time. Like we're seeing, like originally, these big tech companies were far more speculative, and they were the debt to equity ratio was far higher. And over time, as we see that change, we start to focus more and more on the cost of equity as opposed to the cost of debt, which I think might be another reason that we're less sensitive to the Fed rate.
Yeah. And so, I mean, and these companies, I mean, at least with Google and Meta and Amazon, I mean, they're making money, like they're kind of raking it in, and they can use, you know, their existing cash flows to sort of for this. Company like SpaceX, maybe not so much. It really depends. It's depends on which company, but for now, I think they're okay. Again, it really depends on like what they think in their research, but yeah, we'll see. I do think this CapEx spending will keep going up, and then maybe it will become an issue at some point. But again, lots of unknowns. Essentially, we're going into big startup mode.
So what would be indicators that CapEx is becoming disconcerting? For instance, earnings, maybe quarterly earnings starting to miss by some of the big seven.
Yeah, I mean, if the analysts can nail down sort of what they think it should be at, and then I don't know about earnings, because you know these companies will probably just keep reinvesting stuff. So maybe just revenues, if they keep missing on revenue or what they're getting out of it. So if we see consistent missing on revenue estimates, and then maybe guiding down below expectations consistently over quarters, then that's probably an issue. If you see like consecutive quarters of that. But so far they keep raising and raising their estimates and guidance.
I'm gonna play bear for a minute.
Sure.
My concern, if I'm reading the news correctly, is that NVIDIA has become kind of the bank.
Yes.
For all of these. So they loan money to companies that they want an interest in. They loan money to Oracle. Oracle then buys services from OpenAI. OpenAI buys something, you know what I'm saying? So it's kind of going around.
Circular financing.
Yeah, it's incestuous. And where's the real money in all of this? So as let's call it the bank, as the bank has limited resources, if they extend out, let's call it a margin, right? Way beyond that, that creates a bubble. And that's why people don't want to say bubble. Some people, bears, want to say bubble, but this is the issue. And so anybody who's throwing money into this is also at risk, and there could be a cascading effect. And so, yeah, if there's a significant miss or a series of misses on earnings, and people get skittish, the well dries up. So they can't borrow. The data center development stalls. There's all of these things that could happen all at one time. And until that happens, I'm very bullish on the market. I want to stay, long in these issues, but it's concerning to me.
Yeah. And, I think it could be that some of the big techs, like some are, they're in a good position. And if you're talking privately too, like Anthropic seems to be at the forefront, but, and I think there will be multiple winners. And I think there will be multiple winners all over the world, because China's scaling up too, but could be not everyone's going to win, and some of these companies just have no choice. They're diving into the AI race. They're just going to keep throwing money at it, not because it's because they just feel like they have to. And then those are the ones that might run into some issues, but, and so there was some maybe speculation that could be Meta, but then maybe Meta's catching up. I don't know. And so it's sort of like, there's some clear leaders, and then there's some second third place runners, and then there, you think about SpaceX with XAI, Grok is probably not in the lead, but now Elon's gotten pretty clever and turned them into essentially a giant neocloud. Now they're doing compute deals because they have their data center build outs, and so they're locking in Anthropic and Google. So it's sort of just a constant race between these big techs, and I think they're all sort of, it's a combo of like, it's confidence, but also sort of a sense of urgency because they are, they have to compete. And so, yeah, we'll see how this plays out. But I think I think we turn bearish if we start seeing these growth expectations or these guidance expectations, if they start sort of lagging the initial projections. So far, that's not been the case, but like if that starts happening, then I think there's some reason to be concerned. But it's just one of those things where you just got to closely monitor the situation and just like keep an eye on it. But as soon as you get like a signal of maybe a slowdown, then it's like, okay, maybe we got to be a little more careful here. Yes, Omar.
Do you think as soon as one of these guys develops a module that doesn't require as much RAM and GPU usage, that'll be the first big move?
Well, that's been, I haven't been super dialed in, but I think there's been rumors about something in China going on with that. I mean, well, last year it was DeepSeek, and then now there's some new thing with that. So if someone can figure out like a way to really do it for super cheap, yes, that could be like a drag on like the bigger competitors, and it's like, oh wait, we're spending too much money then on this, and then so far I don't know, wait and see. There are rumors about this, but again, who knows. I think right now it seems like everyone's kind of NVIDIA's at the forefront still. Everyone's reliant on their stuff. I did send some videos, YouTube interviews with Gavin Baker, who's kind of the leading semiconductor analyst out there, in my opinion. He's usually pretty good in his estimations. He's pretty confident that at least like NVIDIA keeps winning, and that no one's really gonna figure out like a much cheaper way. He's not even, and I'm not sure about this. He thinks that China falls further and further behind, just because of the scaling and how it's going, but I don't know about that. There's some other bottlenecks we have to deal with, and China does have a lot more and what they can do with like rare earths and the energy side of things versus us maybe. But again, there's a lot of questions here, and not to mention the whole smuggling, the SMCI smuggling stuff into China. And actually there's another thing I want to talk about with that, with ASML. But so yeah, it's a possibility. But again, we'll see. If people start adopting, let's say there's a cheaper model from some upstart that's figured out a clever, innovative way of doing it, and then people start using that more, like then it's like, okay, maybe these big ones will have to rethink things. But so far, everyone's kind of using Claude. Everyone's kind of using, still to a degree, ChatGPT, and just the main ones. Yes.
CEO of Microsoft today announced they're considering putting a lot of money into one of these Chinese LLMs, making it a competitive player in that marketplace.
Let's see.
Just want to disrupt.
Just double check this. Just curious, show of hands, as your main, I know some people use multiple LLMs. Who's using Claude mostly? Yeah, okay. Who uses ChatGPT mostly? Okay. Gemini? Okay. Grok? DeepSeek? Anything else? Okay.
Use Venice AI.
What's Venice?
It's unfiltered and uncensored.
Is this like the DuckDuckGo of AI or something?
Yeah.
You should also look into Uria. It's like a
How do I spell it?
Swedish. It's EUR IA, I think. There you go.
Is this along those lines too?
Kind of just like I used it very, very rarely, but I'm pretty positive that it's a Swedish company looking into finding like a healthier, more, what would it be, sustainable use of AI.
Oh, it's not consuming as much energy type of thing.
Mm-hmm.
Okay.
Exactly. Yeah.
Heats homes.
The what?
It says it heats homes.
Yeah. Okay. So when you use it, it's like good for society. Okay. All right.
It's not a bad thing.
We'll see. And Venice is like,
Unfiltered, uncensored.
okay, so that's just like rock on steroids, kind of. Okay.
And
Yeah.
I think, so I have an account, like $10 a month, it gives you 50 to 75 different module access.
Interesting. Keep these in mind. All right, so there's others out there. But it seems like most people are using, Claude and ChatGPT. Actually, who's using Gemini again? Some reason. Okay. Do you want to explain, like, is there an advantage to Gemini or you just have
I think actually, so I'm doing a lot of experiments in picture generation.
Gotcha. And you think Gemini is, or are you just doing it on Gemini just?
Yes, because I think I don't think ChatGPT's generation is better.
Interesting. Omar?
So I do use Gemini mainly because I can tell it to access my Gmail and my Google Drive.
Oh, yeah.
That's the only
It's in, the whole Google
So
ecosystem,
anything I
yes.
have to do with email or upload a document to my G Drive and say, hey, just reference this later, I'll do
Right.
that. Otherwise, it's the other one.
Toby, did you want to?
I'm very curious, how did you end up finding Venice AI? Like, how do you find your?
After I found out that all these other big ones were filtering my stuff, I started asking Gemini, hey, is there other vendors who don't filter? And it actually told me I can hear some other ones.
Okay.
Have you compared Venice to Grok? Because Elon always likes to talk about how Grok.
So within here, there are Grok modules that you can select.
Gotcha.
For me, I would say personally, I heard this from colleagues of mine where they're kind of against AI, but they're trying to find like a better, more like resourceful alternative. So that's when I found about Uria. I don't know the whole mechanics behind it, but yeah, this is like for the people that are trying to find a sustainable, better AI usage. Yeah.
Jose, did you? For Gemini?
So aside from the fact that during finals week, students got a year for free, I signed up, but it's very good at a lot of math, and that's what I was using it mainly for. It's very good at math. And in one of my classes, specifically vibe coding, Shay was teaching us to vibe code, and it was good at writing code, and you can troubleshoot it and stuff.
I think that's what.
What is good as math?
Sorry?
What's the model you're talking about?
Gemini.
Gemini, yeah.
Yeah, I think.
Yeah, I like that because I also use that to do math research. I'm a PhD in math. So that's
Justin, the professor, he's not here, but he did a little thing in one of the earlier meetings on the TPU and Google, they had the TPU technology and what they're based off. And it's quicker and it's better. It's like matrix calculations and stuff. It's much better, more advanced than math. And so that kind of checks out. So I guess for people doing math-based research, that makes sense. And that's the whole, again, and that leads into the whole TPU versus GPU debate. I think there's just room for all of it, demand for all of it. And then NVIDIA's trying to, they bought Grok with a Q. We dived into that earlier to sort of catch up in that sort of TPU thing and plug that hole because their inference or whatever, their speed, I don't know, it's like slower. I'm not like an expert on that, but that seems to be the thing. So again, it's a big race, but yeah, Google Gemini seems to have some, they're kind of the leader there. So there's definitely for certain tasks, I think certain AIs work better than others. And I think everyone's fine. That's why for me, like, yeah, just multiple, but kind of favor Claude, but you know, for other stuff, ChatGPT, but yeah. All right. Actually okay, so that leads into the next conversation. Obviously, I don't sure, but you know, Claude released Fable 5, Mythos 5. Fable is just kind of like it's based on Mythos. It's for like the consumers, but you know, it released it for what, like a day or two? I don't know. It was out very briefly, and then immediately they got this this thing where the U.S. government sent a directive to suspend access to Fable and Mythos 5. Because I guess there was some jailbreaking, and I think it was Amazon that discovered this. Let's talk about that. And initially, I think it was for like non-US nationals, and then they just did it for everyone, which is quite interesting. Because it seemed like it's like even for employees like in Anthropic, like it applied to this. Is just like, whoa. All right, let's just see here. Who was using Fable 5 for the brief? Yeah. Like, oh, okay. Did you notice any differences?
I think it fixed a lot of. I don't think. Yeah. So I have a Chrome plugin, and I have struggled with one or more bugs for a lot of time.
Yes.
But Fable 5 fixed that.
Wow.
Wow.
Pretty quick.
It used like half my usage in like probably like an hour.
Yeah. Okay, yeah, not much room to work with, but yeah. I've seen stuff on Twitter where people are like, oh man, it solved so many things, or I don't know what they were doing, but like it was some crazy, advanced things. People found some extra user. So Fable, it's from Mythos, and Mythos is kind of the first class, I think, that's trained more with the Blackwells, the next gen GPUs from NVIDIA. And so it's like too powerful, it seems like. So let's talk about this. Let's see. Okay. The trigger was a U.S. Commerce Department export control directive. Late on Friday, June 12th, citing national security authorities, the government barred Anthropic from distributing Fable and Mythos to any foreign national, not just people outside the U.S., any non-citizens inside it, yes, including Anthropic's own foreign national employees. Mohammed, didn't you say you were like restricted? Like, because for a little bit, I was able to use it, I think, and then you weren't.
Yeah.
You're not a U.S. national, right? Okay, so I don't know. But then, yeah, everyone lost access. So.
Yeah.
Any non-U.S. nationals that were, okay. But, okay. It was like suspended initially for people who were like non-US, and then they just suspended for everyone. So, yeah, they just decided, okay. And Anthropic's CEO, I mean, Dario Amodei, I mean, he's been very vocal, kind of like, you know, I think initially it was more performative, like kind of selling to get, I don't know, maybe it was for attention, but then now because he's been citing concerns, oh, we need to like, you know, make sure this doesn't go Terminator on us, stuff like that. Now it seems to be more legit though, because of the scaling curves and how things are going. And so if these models really are that powerful, then okay, maybe it is an issue. It's interesting that Anthropic's like, oh, we're kind of like working to fix this issue. It's like, well, you guys were the ones that were kind of like, you made it, and then you're vocal about that, and then the government did it, and then, I don't know, interesting.
May well be the government is using it.
Yeah. And I mean, I think they did use it for Venezuela and for Iran to a degree. There's a whole thing with that. Okay, Anthropic disputes the severity. It characterized the technique as narrow and non-universal, essentially asking the model to read a specific code base and fix software flaws, surfacing only minor previously known vulnerabilities, and validated that the same capability is widely available from other models, including GPT 5.5. Okay, so seems like Anthropic didn't think it was a huge deal for this particular case. The Amazon part, okay, the Amazon CEO told Treasury Secretary Scott Bessent, other officials, that Amazon researchers had used Fable 5 to extract cyber attack relevant info that was supposed to be off limits. Amazon was one of at least 5 companies that raised concerns with senior officials at Thursday night and Friday morning before the takedown. Okay. Interesting to note, Amazon has invested roughly $13 billion in Anthropic since 2023, with plans for up to $20 billion more. Okay, so they have some ties to that. Interesting. Okay.
Right now, Palantir and people in the Department of War have access to Fable and Mythos.
They do?
Yeah.
Okay. So I did see also some reports that they're maybe within days they're going to restore it back for everyone, right?
Until they can verify like Americans' identities, because they don't want people from like Israel and Iran using it.
Is there anything? Here we go. Mythos restored by, okay, this is where the 43% by June 30th. Okay.
All right.
What about Fable? I mean, 33% by July. Okay, interesting.
Oh boy.
Okay, so there's a chance by, okay. I can't believe there's bets on this already.
This is crazy.
All right, so if you want to bet on Fable Mythos being restored, go to Polymarket.
By the way, how do you bet on this platform? I think it's not able to.
There is some for who bets on Polymarket. I don't use Polymarket, but yeah.
I use Kalshi sometimes.
Yeah, I use Kalshi.
Same concept though.
Yeah, I think Al is not here, but he has his Polymarket. He says like you use a VPN and then you use like crypto or something, and I don't know. I looked into it. I'm like, okay, I'm just not gonna. I'm too lazy.
Kalshi, you could just use like a credit or debit card.
Yeah, Kalshi.
Transfer.
Yeah, but Kalshi doesn't offer the types of.
Yeah, like
Kalshi
stuff.
Polymarket offers like everything, but I think it just use a VPN and crypto. So that's not something I don't use crypto, but yeah, there's a process to do it. So yeah, if you want to place a bet, right now, I want to go for it. 33%, I think that's decent. Like for by July 1st, like, okay. If they report people claiming within days, we'll see. But yeah, so now there's a market for everything, and we'll talk about prediction markets more. All right, anything more on this Fable and Mythos stuff? Or should we keep going? Okay. That leads into, I think Mohammed shared this one. ASML, concerns over, again, I guess that China got a hold of one of their lithography machines. ASML denies it, that they've never shipped an EUV machine to China. But apparently the US government thinks that one got in. Who knows? I think, we've talked about issues with things getting smuggled to China, and SMCI, Supermicro Computer, which did pop, by the way, Mario's investment. But there's a lot of incentive to smuggle things into China. And for these companies, even though they're American based or European based like ASML, who knows? I think probably they didn't intend for it, but things will just find their way around. There's always someone who's willing to do something for the right price. And ASML, for those who don't know, ASML has a monopoly, like a total monopoly on this sort of lithography, fabrication aspect for these semiconductor, for, all the chips. And so as a stock, it's in our portfolio. It's been very high performing because of that. Again, yeah, just nonstop running. It's more than doubled over the past several months. $743 billion company now. Multiples are kind of getting up there, but you know, if you factor in the growth rates have been consistently like what, 20, 30-ish% for earnings, sales. I don't know, maybe it is justified. Forward P 38. I mean, up for debate, but it's high growth. Probably going to keep growing for the time being. There are some upstart possible competitors, but very, very far behind. So as far as just what they have and their market share, they're doing great. But of course, their machines are then so valuable for this, then of course there's going to be motivations to smuggle it, you know, if people want their tech or access to it. And I know there's certain Chinese companies, I think maybe Huawei, some of them are trying to do like an ASML or trying to make their own lithography or do that. So there's a lot of incentives. So, you know, just more things to pay attention to. And this is also why I'm not like fully in agreement with Gavin Baker, like on this, that China just falls behind so easily, because, and I don't know how long it takes to reverse engineer something of this type, maybe a while, because we're dealing with atoms here in hardware, but you know, they're going to figure things out too, in terms of the design for the chip and the GPU stuff. So I don't know, you know, but maybe that small difference in how things scale exponentially, maybe it is a big deal. But I think, you know, China is a formidable competitor to the US in the AI race for the time being. So there's just a lot of back and forth. And, you know, I think nothing wrong with a little Cold War to get things going, you know, for growth, you know. So it's more of that. All right.
Well, I'll make one note, and I'll steal a page out of Peter Thiel's book and say this because he always talks about AI and automation and humans working together. I think what often goes amiss when we see news like this is not only do we have rumors and innuendos of China being able to import ASML machinery, we do know that they've also hired former engineer designers and leads from ASML to come work within the country.
Yes.
So it's not only about them being able to import this stuff, but they also have the brains who originally created it. And that's a much different calculus than expecting them to get their hands on a machine and reverse engineer it. The timeline becomes different when you realize they have people who've worked on these things, whose expertise have led to these designs, who are also now on their team looking to build on it and grow further.
Yeah.
So,
and there's a question of brain talent. Like, a lot of brain talent, like from China, has historically been in the US, but I think China's doing a better job of retaining that talent, you know? And so, like, again, that's sort of a long-term trend thing, but, you know, for AI and for these types of, you need PhD level STEM, you know, researchers on this type of stuff. That's just how it is. And it's also why Elon's been very big about the whole, like in the past, like the H-1B thing, you know, and made a big deal about that. So it's going to be something to watch, but I think China has a lot of things they can play. So we'll just keep an eye on it. So either way, it just means ASML is just in high demand. So good for ASML stock, I guess. Anything else? Anything more on ASML? We're gonna move to the next topic. Let's see what we got here. Let's go into some other stuff. Actually, okay, first I wanted to talk Snapchat. But let's talk SpaceX, because SpaceX did IPO. I know we've been talking SpaceX past few meetings, but now they've officially IPO'd. Who ended up buying? Yeah. Okay, that's the IPO. All right. So, and I think, yeah, Jose, you said you were gonna you got some. You believe in Elon, the vision. Mario, you got allocated, right?
I did, yeah.
Did you get that 135 at the?
135.
Nice, nice. So yeah, some brokers were offering shares pre opening of trading, the IPO price. It did run. It ran to like, you know, over 200 at one point. I think overnight it went to like almost, it was going, and then now it's kind of tanked back, and just the volatile nature of things. Still, it's above the 135 IPO price, so I wouldn't call it like a failure or anything. But again, SpaceX is a giant startup. That's how it's being priced. And so you should just expect these types of super volatile swings regardless.
And we have the indices buying in
Yeah.
at the end of the month.
Is it the
First week of NASDAQ.
Okay, yeah, because the S&P doesn't.
No, S&P said no.
Yeah, 'cause they have the committee thing.
But still, that's enough to
Getting into
cause some
NASDAQ
movement.
is something, yes. What's interesting is that some of these other companies, like space companies, like Rocket Lab, actually just sold off, I think. Once the SpaceX IPO hit, they sold off more. So it seemed to be more like, I think we were discussing last meeting, it may have been like a sympathy thing, where, oh, you get in these space companies and, you know, it'll play off of SpaceX, right? Turns out it's the opposite. Money's just flowing out of those into SpaceX because, you know, a lot of money, I guess, was in Rocket Lab, in SPCE, Virgin Galactic, because they couldn't get into SpaceX publicly. And now that SpaceX is on the market, that money kind of just shifted around a bit. So that's not like now I think they're moving more in line, as in they're both moving down together. But there was an interesting like inverse type of move with those sympathies for a little bit. So not quite what maybe was initially expected. Rocket Lab did not pop, it actually took it down. But yeah, so now SpaceX is public. Now we get to see how the market, you know, what the market wants to do with it. I have I have to hold till September at least. I have to, you know, I have my insider lockup, whatever thing, my private shares. So I just have to sit and watch it do its thing. And I don't know, hopefully it goes up. But again, we need some actual quarters to come in with some actual showing of revenues, et cetera. Just like with all these hyperscalers doing the big spending, it's like with SpaceX and all they've done, I think the business moves have been great. Acquiring Cursor, you know, they have XAI into it. They're planning a lot of stuff with the moon, maybe Mars. And then obviously the orbital compute, which is going to be a huge aspect, acting as a neocloud for Google and Anthropic and others. I think they just did another deal today with some other AI company. It's like a $10 billion one. If you're in SpaceX, good luck. It's just, you know, it's a crazy one. Is it at 154 now? Did it really go down 16? Oh no, this is over, was this today? 16%, jeez.
Yeah, sounds right.
Wow. All right, well, that's just how it goes. You know, that's just what you sign up for.
Mario, when I buy in, I'll let you know so you could sell right at that point.
Yeah. That's how it works. That's exactly how it works. All right. Anything more on SpaceX? Okay.
They're gonna acquire some really big. There's this company called American Bitcoin, started by Eric Trump, and they're acquiring their like warehouse with like their Bitcoin mining operations and stuff. But it's gonna be like later though.
Oof, this is like a penny stock now.
Yeah. Don't buy this stock. It's a trash stock, but
that's. I mean, for SpaceX, it's not going to move the needle much. Just saying.
Right.
But who knows? Maybe
they're buying Bitcoin.
Yes. Be careful when you play these things.
No, definitely don't buy this one. This one's trash.
Oh, that means Eric's definitely gonna buy.
That means I'm gonna buy. Yeah, that's my wheelhouse.
Hold.
Yeah. Yeah. Oh, you know they got SpaceX 2X. Like immediately, they just, you know, down 32% today. So there's an inverse. Do you know the inverse?
I don't.
Where is it? Let's see. Yeah, but yeah, okay. You can trade if you want to do 2X SpaceX. Feel free. I can't believe this is another thing. I just they started coming out with these like leveraged ETFs on individual stocks. I mean, that's a sign, and it's been going like this for a while. I think it's just we're getting a little stupid here.
It's like a CMO.
Yeah, it's and again, I don't know if you guys, I was talking about this with Justin last meeting, but the XIV event, like the inverse volatility ETN thing, and I used to trade that, but that thing just imploded like 90% in a day and got terminated because of a huge imbalance when kind of VIX started acting wacky and the futures, how it was trying to like rebalance that. This is not going how it should have gone. And so like, I'm not saying that's gonna happen. Like, this is a very like small, like one-off chance, but if you know, more and more of these levered things, and who knows, and then you, not to mention MicroStrategy and all the they're doing, but yeah.
SSPC, just for educational purposes.
Oh no.
Oh, that's the inverse?
Yeah.
Okay. Oh, that's up. Oh, look at that.
Okay.
Look at that. It's gonna break out now, right? Yeah. So yeah, if you want to short SpaceX, you can do it by buying this inverse 2x ETF, and then you don't have the risk reward profile of a short where you can lose infinitely. You can just, you do have to deal with decay though. These things are not like a free lunch. They have a decay that's priced in. It's how they kind of operate.
Is this asset just buying puts on it? What is it?
They do some kind of like.
How do they collateralize that?
So they're levered. They're using lots of leverage. They're shorting SpaceX. They got a bunch of cash. Some of these things, it really depends on the company that issues it and how they handle it. But however they do it, whether it's through like derivatives or shorts, or okay, they're using some swaps, other more derivatives, they will get that tracking where every day it's tracking it, you know, inverse 2x. And that was what I was saying with XIV, the inverse volatility thing from 2018, like the tracking fell off. So that doesn't mean the tracking's not a given, but like it should be like this each day. But again, who knows? It's essentially, you can think of this as a long-term put option though. There will be a decay aspect to it. So you could buy long-term puts, or if you tend to have wider bid-ask spreads, if you want to deal with just something like this, maybe a tighter bid-ask spread, less slippage, then you can deal with this. But again, yeah, crazy stuff. Just trade at your own risk.
To Eric's point, all of these wild asset classes that are being invented and all this too, who knows what a CMO is? Collateralized mortgage obligation. These were the assets that were created by trading houses that caused the mortgage debacle back in 07, 08. And it was Michael Burry who took out insurance against the lowest rated CMOs, took out $1 billion on these. He actually went to some of those trading houses and had them create the assets for him. He put $1 billion, and when it tanked, what did he make? He made 100.
Right, because they went up exponentially.
Yeah.
Kind of like how put options would go up. Yeah. So yeah. So he bet against housing via I think he was buying credit default swaps, and yeah, because they would just, it was kind of just this unhinged, unregulated thing where I guess you could just trade people's mortgages or something. I'm not an expert in that, but yeah, it's just something getting out of hand in finance, and then derivatives just exacerbating it.
I mean, are you seeing a parallel?
With these levered things, I don't think it's to that degree. But again, it's just one of those things where in finance, in financial markets, too much of the same thing is not a good thing. There's usually some kind of reversal action. In 1987, when you had the 1987 crash, I think it was triggered by portfolio insurance. It was essentially just like a stop order on the market. And so everyone was buying this, and then of course it hits because the market has some big down day, and then because everyone's selling at the same time with this stop triggering thing, and when computers were just coming on to the market, like it got out of hand, they couldn't handle all the all that stuff, and then that's how the market tanks that much. So it's just one of those things where there's some liquidity event, some imbalance, everyone's crowding. It's crowding behavior. You don't want overcrowding on one side. Yes, Omar.
Don't forget the pattern day trader rule is out the door.
Yes. Yeah, we were discussing that. And so, and there's been some wonky moves, like we were talking about with the Chinese microcaps, like maybe they were using that as an excuse, but with PDT out, like now anyone can just gamble in and out of stocks as much as they want. A lot of brokers have started just like, rolling with this right away, because that means more money for them via the commissions or order flow or whatever it is. And so like it's, again, that combined with the SIBO offering like binary options, you got zero DTE options, you got all kinds, you have like even smaller term intraday, you have like intraday options on like within, I don't know, it's getting ridiculous. And so I'm not saying this is going to cause the big crash, but look, when things shift the opposite direction, let's say we run into that bear scenario where the hyperscalers, the revenue growth projections or the CapEx spending or whatever, it's like things start slowing down or they get worse than expected. Well, then it gets exacerbated. You know, we've seen this in Bitcoin with MicroStrategy being acting as essentially a levered ETF, and they've been probably exacerbating this move with what they've been doing. You know, so it's just it's a crazy trading market, and things are just getting more extreme both ways. And it's an interesting situation where, yes, I think the market has a lot to be bullish about, but then also it's more volatile, which historically is not good for markets. So it's kind of this weird, unknown, unusual situation we're getting into more and more.
So Ryan, can you create a program for us to track all these volatility factors?
Of course. I mean, I'll make something that tracks meme coins, zero T options, right?
Yeah.
All the
good stuff.
micro caps like penny stocks, right? All this.
Just
I'll give you the best ones. You'll make like 2 million% return per month, guaranteed.
gamify it like Robinhood is, and
Well, you can plug in your favorite AI and have it trade out for you.
Yeah.
Yeah.
Who's been, by the way, side note, but who's been using? I know Brian said he's used. Are you still using the Robinhood? How's that going?
It's been pretty nice.
Yeah, you just set the parameters, sit back, and let it do its thing.
Yeah, so I gave $3,000 into the account, and the agent has been making trades. So I'm in the phase 1, so I have 5 phases set up for this account. I've talked with this agent for a while. And the phase 1 is just buying ETFs and making sure that it is getting profitable and looks like it's making purchases in SMH and XLK and different SCHG and different growth ETFs. Right now it's up 5% in a week, so
nice.
That's been pretty nice. I'll see how it goes with the individual stocks, but I think this is going to change the game, and I think everyone's going to have a personal AI who's going to trade AI for them. It's a matter of time. Are they going to be able to create a better quantitative strategy on their own? So it's going to be the alpha trade.
Right. And it still depends on the human operator, right? Or the human sort of and what they sort of want from there. Yeah. Mario, did you say, I forget, did you say you were doing this too, or you were going to?
I am, yes. Okay. Although my background is not in AI, so it's taken me a minute.
Yeah.
But I will say from a layman's perspective, it's interesting because it's essentially just like a concierge service out of the box. But there's the avenue to do fancy stuff, so I'll get there eventually.
All right.
I'll give you guys the dumbed down updates every week or every meeting if you guys want.
Sounds good. All right. Anything more on any of this stuff before we move to Snapchat? Okay. All right. So I don't know if you guys saw, and I put it back. Andrew's not at the meeting today, but because he has the Meta glasses, but Snap came out with their glasses and got an interesting reaction to this. This is their CEO. So it's $21.95. Is this a good look? Yeah. Is this like the Cybertruck of glasses, or better? Yeah.
Way worse.
So yeah, this definitely got a lot of attention, mostly negative attention. But Snap came out with, they got these glasses now. Is anyone going to buy these? Try them out? Does anyone have Meta glasses or has tried them? Yeah.
Yeah, I got some Meta glasses, but it's useful if you're asking questions, and I know the new updates involve live translation. I've yet to try that though. That would probably be really good. Yeah. But I don't see it.
Moses.
My dad has them, and like we're road tripping like across the US, and then he would use it like find food along the way. It's like what cuisine, this or that, or like route us to the nearest like rest stop or whatever it is. So they're pretty cool, but I don't know why you get these over the
Right.
other ones.
Do you guys know how much the meta ones are?
I think they start around 230, something like that.
The new ones are
But the
around
new ones are like,
730,
yeah,
750.
I think the new ones are better because you can kind of control the screen and stuff. But even then, I mean, it's kind of like a concierge where you can ask it to like book a restaurant or find you a spot to go to, you know.
So Moses, was your dad using these while he was driving?
Yeah, it'd be like, hey Meta, and then like just ask the question or like whatever it is. It's pretty
So,
cool.
so I'm curious because I'm so out of the loop, but like, how does it work? You put the glasses on, do you see like text writing in it or something? Is it like Terminator or
No.
something? Okay.
At least on the display was the new version, yeah. There's a little like,
Oh, yeah.
box that you can, a little screen that you see and you can scroll through options and stuff with the remote. It's not a remote, it's a bracelet. But you just talk to it. It's very responsive and.
And then what?
It's like having
It's like something like this.
ChatGPT, like just or like any AI model just
Interesting.
in glasses. You can like listen to music on them too.
Yeah, that's pretty cool. It's actually cool. Take calls and all that.
I would say it's also really good for like influencer lifestyle. A lot, very good for vlogging, for sure.
For blogging.
Yeah.
Yeah, that's true.
It's big. People watch that stuff.
Let's talk later.
I use it a lot during my gigs, and I get a lot of content through there when I'm like playing and stuff, and it's cool. It's easy, yeah, like you said.
Maybe there's a future where, you know how we all just scroll our phones, now we'll just be scrolling with glasses. Glasses walking around. We'll see. All right.
Looking to the bottom right all the time.
All right. So the Snap ones are like twice, 3 times as much as the Meta ones. So if it's that much, like, what's the advantage? I wonder. Okay. So the Meta one pairs with a neural band. Snap one, no phone. It's twice the weights. Snap went further on capability. Okay, specs offer displays in both lenses versus the Ray-Ban displays, single display. Okay, okay, so it's just interesting. Okay, 2 displays. Don't require an external device like the Meta ones do. Okay, does that justify the difference? Weight and price, yeah, the Snap glass is way more. I mean, when you wear the Meta glasses, do you feel it? Does it weigh more? Is there a difference or no?
It does feel a little bit heavier than regular glasses because there's obviously speakers and components and everything in there, but it's not a deal breaker.
Right.
You can get used to it.
Yeah, it's one of those things with tech. I mean, first version, you know, it's gonna be this, and then the next versions could be lighter. So we'll see.
Like the first handheld cell phone that was like
Yeah.
this big, weighed like 5 pounds.
First iPod was a big thing, you know, bigger. Yeah. So we just need more versions to come out. And again, even with Snap, is, you know, even though Snap does not have a good track record ever since forever, they had their COVID boost, but like they've not had a good track record. Gotta give them some leeway and wait and see. Yes, Omar.
Will this make them an easy buyout from Microsoft, someone who wants to catch up with that technology?
It's a possibility. The question is with buyouts especially, it's like, are they gonna just get bought out for scraps after they tank another 80% or something? But yeah, I think they have, so they have some tech. There's something maybe a bigger company could see them as, and then they have these glasses. I don't know. It's one of those things. This is a highly speculative play now. And then you have the activist angle too. So that could come into play too. But if you're dealing with Snap stock, just know that there's a lot of things that have to, you know, go right for them to turn around. But yeah, I don't know. I don't think anyone here is going to buy those glasses anytime soon. Maybe demo them if you get a chance. But yeah, it definitely got attention though. And in this day and age, any attention might be good news, or it's something.
Yeah, they look
kind of silly. But yeah,
they don't even look nice. Yeah,
Yeah, no.
You'd think they would make them nice at
Yeah.
least.
Yeah, I don't know if this was if they were trying to make it like intentionally ridiculous or, you know.
If a celebrity starts wearing them, they may get
Yeah.
popular.
Yeah, that's true.
All right, so we got some other potential topics. Well, Yum selling Pizza Hut. I don't know if that's big enough one. If anyone wants to talk about that. If anyone has used Pizza Hut ever in recent years. Oh yeah, let's talk about some local stuff. Yeah. All right. So, okay. I really want to talk about this actually. This is from, we were thinking about putting this on for last meeting, but so Pritzker's been making some moves. We know that elections are coming up. I think, you know, based on odds, he's got the governorship locked up, but this is interesting. So, okay, starting July 1st, they're halting tax incentives for data centers in Illinois. And so that's, you know, it's an interesting point because there have been, we talked about some local data center build outs and approvals, denials, denied in Naperville, approved in Joliet, et cetera. It's kind of, you know, depends on the community, but it seems like Pritzker is trying to maybe tighten some screws on this a little bit. And I think it's probably just a political play because elections are coming and maybe wants to pander to his base. What do you guys think about this news and what this might mean for data centers in Illinois?
I think it's awesome because like they use so much water, right? You need to build them next to like some sort of water. They're loud,
right?
And if they're built too close to residents, like they can actually have health issues. So because the noise, constant.
There's been a debate growing nationwide, a lot of pushback from local communities on data centers near homes and you know, whether it's their electricity bills going up or, you know, the water noise, et cetera. So a lot of people don't want to be near them. And so, yeah, it's an interesting topic.
Just to be devil's advocate on that thought and note, I personally think halting the tax incentives for data center companies coming within the Illinois will make all the companies go out of the business, while all like data centers will come. Like at the end of the day, like in 10 years, there's going to be so much data centers, and we are the ones who has the least data centers at the end of it all. The people are going to go out of the state. There's going to be no jobs within Chicago. There's going to be no jobs within Illinois. Like who is going to stay here? And data centers are going to have a lot of jobs within the state.
Right. So like maybe they go to Indiana instead, right?
Yeah.
Like Ohio, right?
Okay, counterpoint to that. If any of you are watching Darren Bailey's ads, he's the one running against Pritzker. He got 40% of the vote last time. He revealed Pritzker has millions of dollars invested into AI development corporations. So this is absolutely just a political posturing. When that came out, he had to do something to say, well, I'm not really one of those guys, not really going to try and capitalize on allowing this development in the city. He's so two-faced. Well, he's a politician, right? That's how do you know a politician's lying? His lips are moving. So this is, I think that's all that is. I don't think you have to worry anything about Illinois being out of the race if he stays in.
That makes sense.
So anything more on this data center thing? Because there's another, yes.
So no Illinois specific, but there's this company Vertiv. I don't know if you guys have heard of it.
VRT.
Vertiv. They've been having like a lot of natural organic growth, 24% year on year, margins increasing, and basically what they do is they kind of do everything for a data center, from like construction to the cooling to building the racks, with deals from NVIDIA for the Blackwell chips. Yeah, like they're trying to make it more efficient. And another thing just came to mind. NVIDIA, I think it's NVIDIA that they're like offering. I don't know exactly what it is, but you could have like a mini like data center in your house.
Oh yeah.
It's like your electricity, and I don't know how you would benefit from that, but like I'm sure there's like something there. But NVIDIA is basically like asking people to put these. I'm not exactly sure what, but that could be another solution.
Sort of like how people have like solar panels installed.
Yeah, like something like that. Yeah. So I don't know. I think there's something there.
So Vertiv is involved in this?
Vertiv, yeah, like they do like servicing for data centers and like the AI racks, cooling. They made like a lot of acquisitions. I think cooling is like their main like.
Liquid cooling.
Yeah, the liquid cooling is like their main like edge. But yeah, this company has been.
Or Illinois in general. I don't know, but yeah. So I don't know what this means for crypto trading firms based in Illinois. Okay, Jump has operations in that. That's another trading market maker stuff. Okay, so yeah, that's probably going to get pushback from those companies, but who knows? Again, will it drive them out? Probably, I guess. But these moves, usually the way you look at them is what's the angle here? And so for me, I kind of have this thesis, like, I think it's just political positioning and not so much for I think, because Illinois is a very blue state. I think Pritzker's basically got the governorship locked up. And I think his odds are probably like 90-something% of poly market. It could be for the presidency, And again, I don't think he would be a favorite, but he's 1% right now. He's tied with The Rock in poly market. I'm just saying. Like, yeah, Stephen A. Smith, Michelle Obama, Stephen A. Smith, Hunter Biden is right there. Like, here we go, All right, Jon Stewart is like twice of what Pritzker's at. I'm just saying, like, there's a play here. Like, if you're thinking about it just from an objective trading perspective, maybe buy Pritzker at 1.3 cents, and you could get like a pump to maybe like 5-10 cents over the next several months to a year. I mean, that's a good several X move, right? Good liquidity, 14 million in volume. So it's like, yeah, not going to move the needle much if you play this. And so you buy Pritzker. Now, realistically, is he going to win the nomination for the Democrats? I'd say the odds are probably not, but could he get to like several percent based on like these moves he's made? I think he's doing these sort of moves to get a little more, support within his party, so that if he maybe announces that he's running for president, then gets a little more. Because I said, look, I believe, okay, yeah, maybe not good long-term to drive out the data centers financially and so forth. But for the next couple years, it's a legit play from political angle because there is a lot of pushback. There are a lot of concerns about the environmental stuff. There are a lot of, people don't want to live near them, People don't care about like the long-term, like, oh, is this, good for society because of the scaling curves? 99% of people don't care about that or think about that stuff. They just know data center near my house. I don't want this here, the immediate here and now. So Pritzker, he has that audience to play to. And so I think this is just another move where you can position for that. And for him, from a risk reward perspective, it's favorable for getting more support. And then if he announces like his candidacy, could get a bump on that. And so I'm just saying from a trader's perspective, maybe buying Pritzker at 1%, riding it to several percent and then selling once you get a pump. There's a pump play here. Again, we got to take prediction markets more seriously because this is the new wave. They are behaving more like stocks. And so, you have Pritzker trading at like a fraction of what Jon Stewart is at. Come on now. Like serious. He's tied with what? He's with Hunter Biden. And like, I'm just saying, like, there's a play here on Pritzker. Okay. Isn't this Plattner guy? Isn't this the guy with the scandals? Like, he's even higher, right? Yeah, so it's like, I think he's undervalued at 1%. He's tied with The Rock. Like, there's something here. So that's just a thought. It's just a trading idea. That's why I wanted to bring this up. I don't, like, I try to be neutral on all this, but like, it's just funny to see like, maybe there's edges, especially politically, because people are so biased with their sort of beliefs, and that's fine. But if you can take an objective lens, then you can find some edge here. So just a thought, but yeah. But any thoughts on the broader thing, like the crypto transaction tax or anything like that? I don't know. Justin's not here. I think he would have some thoughts on that, but.
Because I'm not sure how they even regulate that, because like crypto is so like decentralized that I can have my own like cold wallet and just make the transaction online. It's not connected to my name.
Yeah.
Like,
I don't know.
I'm sure that's like fraud in a way, but like I don't know how they even.
Yeah, I think
some of the crypto firms are required to do KYC, which is know their
yes.
customers.
I think it's for the firms. Yeah.
If you have that going on, the Illinois will be taxing every transaction.
Yeah.
For the clients.
That makes sense.
So this is more, for like Jump and those types of firms that have their crypto market making operations. This is more probably directly affecting them. That's why they're heavily pushing back against it, so forth. Possibly would just move their operations to another state, if I had to guess. But politically for Pritzker, I think that's for him getting more support within his base to maybe gear up for a presidential nomination. Hey. All right, so, and then, so there's that. There's also more Bears stuff. We can talk about that a little bit. So last meeting, we talked about how the Bears said, I think they were just signaling, Hammond, Indiana is like our, I don't know, preferred destination, but they're like moving more towards Hammond. Not sure if that's actually the favorite still. But I think Mohammed, you said, it's not like right set in stone, that it is more they couldn't come to a resolution within Illinois, but now 2 Illinois lawmakers, offered new proposals to keep the Bears from moving to Indiana. So this is just more back and forth and posturing and stuff and more leveraging and debate. So any new thoughts on the Bears stuff?
I drove through downtown Hammond last Thursday.
Really? How was it? Was it ready?
It's nicer than it was when I grew up. I grew up down there. But I was talking about it with two of my brothers. We were going to a combined high school reunion down. And there's no infrastructure. Anywhere you put it down there, it would be a decade for them and billions of dollars by the state to build up just to be able to house it somewhere. So I think this is all posturing, exactly what you said.
I mean,
leverage to try and get Illinois legislators to give them what they want.
And again, they have Arlington Park now, and that is a viable space.
Yeah.
That's huge. It's got the, what they need. I think.
You nodded. Do you know what I'm talking about?
Yeah, my family grew up in Indiana, so when they first announced Hammond, I'm like, where is it gonna go?
Yeah.
There's nothing out there, no space for that. And like you said, I think it's just a leverage. They don't want to really leave Chicago.
Yeah.
Be a great place for a data center, though. And I say that only because data centers tend to be put up where communities, activists are not as coordinated and they don't resist it well.
Yep. Right. And Northwest Indiana stands to get a lot of that data center build stuff. And so again, Pritzker's thing puts any sort of drag on data center stuff in Illinois, even though you said, at the local level, they can still decide, anything, if they just want to move to another state, well, Indiana is definitely more open about that, I think. Indiana's willing to do business and have less regulations or red tape around things. It's just not a good or bad thing. It's just a thing. It's just how they're structured. So, all right. So, the Wolf Lake site in Indiana has a history of heavy industrialization, contamination. It's just, I think, realistically, and again, John did boots on the ground. He was there. He saw it. Like, it's not, they just don't have it. There's no way, realistically, it seems like. So, we'll see. But again, you know how politicians are, especially if they want to drag this into like the elections, and then maybe they come to a deal, maybe a couple months beforehand. So then it's like, look, we solved the Bears issue. Now they're in Illinois. Now I can take credit for it, you know? You don't want to take credit for it too early, you know, you gotta wait more towards the fall. I get it.
By the way, we drove through the Southworks site as
Yeah.
well, which is where Pritzker wants to put the quantum computing campus. That also has to be remediated. The soil is heavily contaminated. This is where the former US Steel plant was. So I love the idea of doing that. In fact, I'm pretty sure Yao's gonna end up working there. Yeah, and Yao and Ryan you're gonna write the software, he's gonna invent the quantum computer. You're gonna predict the future for us. We're all set.
Sending us to Mars in 2 years.
Excellent. Yeah, you're for sure, right?
Well,
Let's put that on Polymarket. No. Yeah, so this is all future, and Indiana really needs to do development, but getting it as close to Chicago as they want may not be. And once you get out of that area of Hammond and Gary and East Chicago, you start to get into really viable residential areas where there's gonna be a lot of pushback. So I think that area, Whiting, probably is prime for some sort of development, but not where you're gonna send people trying to have a good time. Okay, there's the casino there. Okay, that's different. They created their own little island, so high security island, right? In the middle of nowhere. And you can go there for an hour or a night or whatever and gamble, lose your money and then go home. But man, sending people out there to, for extended stays or building a stadium, I don't know. Detroit did it, maybe they can.
All right, so moving on, because Al wanted to bring this up. He's not here, he's in Arizona, but I told him I'll bring it up for him. And I saw this on X when it came. So there's this sort of startup, it's called Midjourney. It's like, I guess, an AI, known for AI image generation. And apparently they invented a new like MRI scanning device. And there's a demonstration video. Some sound here, okay. And I guess they're known for their sleep presentations or whatever it is. I don't want to spend too much time on this, but apparently it's like, I don't know if it's like a cheaper way, it's like just as efficient, supposedly. There's a lot of debate about this. We'll talk about this. So, getting into like, to get scanned. 2 minutes. Scan it. That's their fancy, interesting new MRI machine. So I told Claude to dive into it. Where is it?
It looks huge.
Yeah. It looks expensive to use too.
Wait,
Oh,
is,
yeah.
is that the machine? Like
Yes, okay, so, okay, here we go.
Is that AI generated?
Dash, okay. Okay. They announced it June 17th to 18th in San Francisco, new division called Midjourney Medical. So yeah, this is like an AI image company, and I guess now there's like a new medical division with this full body imaging. It's like an MRI thing. No radiation, none of the heavy magnets an MRI needs, at nearly 100 times the speed. Mechanically, it's wild. You step on a platform that submerges you in water about 2 inches per second, passing through a ring roughly 500,000 sensors the size of a grain of sand, each emitting ultrasonic waves and recording the echoes. Okay, the company compares it to being surrounded by 500,000 tiny dolphins using echolocation to build this 3D map down to a fraction of a millimeter in under 60 seconds versus the 60 to 90 minutes a full body MRI takes. Now here's the 3 caveats that matter a lot. Because the hype has outrun the facts, yes. It's branded ultrasonic CT. It's not a CT scan, no X-ray, no ionizing radiation. Okay, ultrasound tomography. Okay, it doesn't use AI. Interesting. It says, the founder says we're not using AI. It's just hardware, software. Okay. Okay, it's licensing the stuff, like it's getting a lot of stuff from another company. Okay, 74 million over 5 years, so might be capital intensive if they scale this. All right, and I guess they're going to open a 25,000 square foot Midjourney spa. Maybe this is the actual business play for them. So for the San Francisco crowd, for the Silicon Valley people, the Brian Johnsons of the world want to like optimize their life and live forever. You know, this is the type of thing that, like, whether or not it's actually like FDA approved, maybe it's like this is the play. Right? Kind of like when we were talking about enhanced games. But you know what? Enhanced should partner with them. I'm just saying that would be an interesting. Okay, they plan a fleet of more than 50,000 scanners worldwide by 2031 with capacity for 1 billion scans a month. Okay. And they claim that early enough imaging could one day avoid 30% of all deaths and 50% of all healthcare costs. Founder declined to say what a scan costs. Yeah, it's obviously in startup mode. So, and then this guy, Scott Alexander, who I guess runs some blog or something, he kind of had pushback, right? You know, this is one of those things, okay, this exists as tech. It's used for cases like breast cancer and dense tissue, but normal med device companies who know this tech well never built whole body versions because it doesn't fill a clear diagnostic gap. Strongest argument is cost. The chips and sensors have far better cost scaling curves than MRI magnets, so at scale it could be much cheaper. Okay, so yeah, there's definitely a lot of, and I saw this on Twitter too, there's a lot of like doctors and so forth kind of pushing back on it, saying this is not viable anytime soon at least, but some saying, oh, there is some interesting innovation going on here. So it's very polarizing, the debate on this. Midjourney is interesting though. The company has taken zero venture capital funding. It's entirely just bootstrapped. And yeah, they have 200 million annual revenue with 40 employees, no venture capital, 5 million in revenue per employee. And so I guess this is, yeah, Holes, the founder, he had a previous company, Leap Motion, and it sold at 30 million down from a 300 million peak. And he said, yeah, I guess I had looked this up with Al earlier, but like he had a bad experience with venture capitalists. So that's why he's not taking any funding right now. Although for this, I think they would require a lot of funding unless that SPA can like pay for it, but that's going to require a lot of funding. So who knows? So there's questions, maybe definitely very innovative founder, but also like, is he the type of person that can scale this thing to like multi-billions or even trillions or who knows down the line? I don't know, but definitely an interesting idea, and they're trying to do some different things. He's known for, okay, Midjourney, okay, framed as a researcher, okay. They had a Discord bot launched inside Discord with public by default generation. Hey, something like that. No free tier, so every user pays now, okay. Yeah. Disney and Universal sued them in 2025, alleging image and video outputs infringe characters. Okay, so they've had some questions over that. Okay, it's just they're trying to innovate. They're trying to do big things. They're running into some stuff. So I think what I ended up and because me and Al were discussing this, I just said, you know what, like, if I had a chance to privately invest in this, not that you can, but maybe down the line, but if I had a chance to privately invest in this is the type of company maybe you throw a little bit at, like, as sort of a, you know, who knows, maybe it's like a multi-100x type, you know, potential company. High chance it goes to zero and busts, but like from a risk reward, just like outlier potential perspective, hey, there's something there.
A Hail Mary.
Hail Mary, kind of like with you and your quantum, you know. So it's like this is something where you allocate tiny, and then just, if you're a venture capitalist, it's like a tiny allocation, see what happens. But again, I do think, again, I think the founder's probably going to have to, like, and I don't know enough about it, but it sounds like, okay, yeah, he had a bad experience with VCs before. I think if for something like this, if you're going to scale, you're going to have to take VC funding. It's just capital intensive.
How much did it say they're pulling from their Discord bot?
Let me see.
They have like partnerships.
19.3 million users with 2.5 million daily actives with their bot. Does anyone know about this?
I've used it.
Midjourney?
Okay. What do you think about it? What do you use it for?
Didn't know it was that big, for one, or that they could fund medical research.
So this is kind of out of left field. You didn't expect.
No. Well, so I used it during the pandemic because, I mean, who wasn't using just random things during the COVID? But they had a free tier, and it's all through Discord, so I never would have imagined that they would have that many subscribers, given that there's no like interface like this, like Claude, right? They never had that. You were just talking to a Discord bot.
Interesting.
Yeah, I personally had a yearly subscription with Midjourney too, but I personally think there's higher probability that this company gets acquired by a big tech or bigger companies.
Yep.
Because right now their technology is not as good as Higgsfield. Higgsfield is a video generation company. You can search up. They have an incredible video engine going up, and I think they have like 4 employees when they were starting out a few months ago. And also, I think with the spot thingy, all the MRI thing, I think it's a great tool or machine. However, I think the cost to scale up, as you said before, it's going to take a tremendous amount of money.
Yeah.
So I think there's much more probability they get acquired by big companies like maybe Microsoft or Google that are in San Francisco area that are interested in this.
Oh yeah, I could definitely see an acquisition type of play here, depending on what price, obviously, but they got something, you know, it's not a zero, like they really do have something here. But again, medtech startups, historically, it's like the hardest thing. It's the hardest thing because not only are you trying to do something techy, innovative, you are also dealing with all the regulatory issues. You know, you think about something like Theranos, what they're trying to do, and obviously they're kind of crazy, but like, again, there's been so many, it's like just such a high, like higher than just a normal tech startup, like just failure rate so high, but you know, someone's got to try, but then you have these FDA regulations for a reason, right? Because we're trying to protect human life here. So it's one of those things. I think there's a play here, probably an acquisition type play. I don't think in the immediate term, it sounds like this guy really wants to like build, but, and we'll see what they do with this whole spa. That's another interesting angle. I don't know how you could scale that. At least in certain places like San Francisco, you could definitely have that for sure. Certain cities, maybe New York, some of these cities that would, you know, allow for something like that. But it's okay. 20 billion. All right. I just asked how much capital. Okay. Oh, the founder estimates just scaling to thousands of spas could require around 20 billion in CapEx. Again, that's just from them, so who knows what it is, but if he's saying 20 billion, all right. 50,000 scanner vision, roughly 20 billion, okay. All right, by 2031, okay. Yeah. Okay, so yeah, it's gonna take tens of billions. And I think there are probably VC firms that would be willing to back this for sure. It's just a matter of, does he accept it from who? Or if someone wants to buy it, yeah. We'll see how the SPA goes too. I mean, the thing's gonna be huge. And people can see it firsthand. I think that's kind of their get loud play, because you got a lot of the VC people living in San Francisco. They're gonna probably visit the SPA too, you know, everyone's into that optimizing stuff. And you get that crowd in and they get to see it firsthand. So that's sort of their hype machine maybe. So we'll see how it goes. Very interesting stuff. Anyone have thoughts? Anyone else have thoughts on Midjourney?
I don't know. I just knew it for its video generation. It's like really good, but
right. This is a whole new thing.
Like I don't know. Just when I saw like Midjourney, like medical or whatever, it's confusing.
Again, it's like for it's out of left field. So again, that's another risk. Like a business going into a domain that they don't have a background in.
Like Allbirds.
Yeah. That's more of a scam, but yes. Yeah.
But there is this like, it's like the SPA idea actually. There's this like similar preventative medicine thing. I think it's called Neko Health. It's like founded by it's what like Daniel Ek, the founder of Spotify, is working on now.
How do you spell it?
Neko. Neko Health. Yeah. Yeah, I mean, I think what was reminiscent for me was just like the idea that like you're like, it's like a Theranos type of thing, right? Like where it's just like, how can you get like very like easy like diagnostic tests that like you can do like on the regular.
Yes.
And so what Neko Health is trying to build is like they're building these like clinics that like basically it's like the same scanning process where it's like you like walk in and it's like an easy like scan versus like a doctor's visit. And then like they're hoping that like that will deliver on like early detection of diseases. But I'm sure a lot of the concerns are like the same concerns that we lectured about Midjourney. Yeah. But also I wonder specifically about the machine and the train. They're like, it's like a tube where someone's like laying flat, like or like laying on their back. Cause like I feel like for a lot of like serious use cases, like like the person like having to stand there is kind of like yeah, I don't know. I feel like for the most serious case, there's a reason why you like go in the machine on your back.
Right.
Yeah.
There's a reason why things are the way they are, and how.
Right. There's a reason why. Yeah. Like.
I personally think from your thought there, is the ability to the cost of the machine. MRI machines cost like tremendous amount of money for hospitals to buy, and I think if Midjourney can reduce that amount of price, they're going to sell those MRIs and have really good MRI scans. That's something that can have very big advantage on. That's personally what I think.
Oh, I think the criticism is that there's a mismatch in their marketing where like they're like people are thinking that these are going to replace the MRI machines like you're suggesting.
I don't think it's gonna replace them, but I think it's gonna be one of the other ways to do an MRI. It's also gonna be different types of ways that people can go in. But I think MRI machines are still going to be there. But if Midjourney spas and scanners are much less cost for the hospitals or the spas, like who else is going to go to the hospital when they can go to a spa?
Yeah. I think that they're like meaning that the population of people who would need this machine are different from the population of people who would need the MRIs.
Gotcha.
Like for example, like if you're doing this, you're mostly healthy, right? And like you're just like going for a checkup because like you're like a little bit of a hypochondriac, right?
But luxury, for sure.
Exactly. And people like from their marketing, I think people are like, oh, like this is very deceptive because like they're claiming to like, because when I think about MRI, I'm like, okay, like someone's like been in a traffic accident and like or a car crash and like they need to like get their brain checked out to see if there's a concussion or if there's like any internal bleeding or something like that. And so it just does not seem like something that like this is able to deliver at all because of the different technology at work, given the tomography thing they were explaining.
So this Neko Health, I mean, I just took a look. Yeah, so it's kind of like the same idea. Midjourney has their cons. I'm sure they took some.
Oh right.
Nothing's original, okay? No ideas are like everyone just rips each other off. Yeah. But so What's interesting is that Neko Health is VC backed. They already have existing places. And Midjourney is, yeah, the bootstrapped holdout that would have to abandon. Yeah, I just don't see them staying like that if they want to really do this thing like what Neko Health is doing. Neko has a 1-year data store to point to of 2,707 people scanned in 2023, 78.5. Okay, so they do a scanning thing too. Okay, so this is not a new, this is like Midjourney sees, they probably saw Neko Health doing their thing. Yeah, hey, let's do that too with more sort of image background thing, and let's dive into this market. You know, and no doubt there is going to be a percentage of the population who's really into this stuff, you know, and all this stuff, and will pay up for these services, no doubt. And these fancy spa looking things. I mean, the whole, if you get the aesthetics right, the marketing, the branding, all that, we'll see. But okay, so Midjourney is really not the only one. I mean, the scanner might be a little differentiated, but the whole spa thing is not a new concept. But again, that might just be their way of getting people into the ecosystem or getting more attention for it. Who knows? But a lot, again, this is really going to depend on the CEO, the founder, this guy. He has an interesting track record. It's, I would say successful, but kind of also mixed a little bit. And, you know, Daniel Ek of Spotify has a very known track record. So it's really going to depend a lot on that. But again, like Brian said, there's probably at least an acquisition play here at a minimum. So they got stuff going for it. They definitely got attention because on Twitter, it's just, they've been, at least from how I've tailored my algo, like they talk about this nonstop. And there's like doctors chiming in on both sides. So there's something here, but we'll see. It's one of those things, yeah, maybe if you could privately invest a little bit of money, there's an interesting concept, innovative, they're trying, but we'll see how it goes. Any more thoughts on this?
I mean, I think it's just interesting because, like, if you're ever just wondering, like, what does my brain look like, and you don't want to sit in an MRI for like 90 minutes, you can just go to Midjourney and do it for a minute.
Right. Well, sort of. I think
maybe.
In theory, yes, but right now I just saw like a tweet is like it takes like 20 minutes.
Oh,
okay. So it's not there.
Maybe not.
I think they'll get there.
Yeah.
Well, they'll improve. You know, you got to start somewhere, but that's the whole like expectation down the line. And again, with these sort of startup things, especially these tech unicorns or whatever you want to call it, like the idea they sell is always going to be like a best case scenario because you have to sort of sell that. You got to like sell your pie in the sky thing, but you have to be kind of realistic. But again, you're trying to get attention. So I see the angle for that too. But it's very interesting stuff. So this is something to keep an eye on. And I think this just goes with the whole innovations in healthcare and so forth also coming about with coming trends. So something to pay attention to. And we'll see how the spa goes when they build that up. But yeah, any more thoughts? Okay. Let's see. Yeah, situational awareness. I mean, could talk about that. OpenAI, confidential, it's kind of known. Files for IPO. Kalshi launches trading on crypto perpetual futures. Okay, just more gambling house stuff. Watt EV ordered 370 Tesla semis. Mohammed sent that one. That's just maybe a signal for something down the line. Yeah, we don't have much more in terms of that. Does anyone have? All right, so I think we should just go into a lightning round then, because there are some stocks I want to talk about, and maybe some other people want to talk about. So let's just do the lightning round. So if you got a stock you want to bring up, or that you have, or you're interested in, bring it up. Who wants to go?
I got one.
Yeah.
MU.
Micron.
Earnings are coming up. First earnings as a $1 trillion company, I think.
And Micron's been on a tear.
Yes.
Yeah,
Yes,
nonstop. We have it in the portfolio. And it's been our best position, I think. And just the growth rates are crazy. Yeah. Who knows if that's sustainable, but they just keep going. There's demand for memory and just more of the AI scaling stuff. So
Yeah, I think that'll be kind of like an interesting thing to look at on the earnings call is what their outlook looks like, or what they're predicting in the future.
Well, and look at this forward PE of 10. That's based on, so that's analyst expectations of like earnings, and usually they're within the ballpark. So it's like multiples are supposed to go down, and they're growing into it. So it's just more. There's huge demand for them. They stand to benefits. Question is down the line. It does depend on the whole CapEx spending from the big techs actually trying to build the framework so that we can have the new businesses on the AI framework invented. And obviously you'll have NVIDIA and Micron, all these immediate beneficiaries. That's because demand's high for their stuff. But the question is like, can we realize that value add down the line? So that's a real big question. But Micron earnings, I'm sure they'll probably just beat expectations, blow it out.
Yeah.
That's just a matter of does the stock respond to that more? This is up another 6-7% today. It's ridiculous. But again, could be a 10 PE next year. And at a 1.3 trillion market cap, it's just a new mega giant. So yeah, that's definitely, I mean, I don't see any reason to sell this. Again, if you want the compounders, you just got to keep holding. You just keep holding for those returns. Like, unless the thesis changes for them, the thesis has not changed. What is this saying here? Okay. This Wednesday, June 24th, after close. Okay. Stock is sitting at, So again, price for perfection. So if you're trying to play earnings, I suggest, not financial advice, but earnings historically is a 50-50 crapshoot. Gambling on earnings, it's just how you could beat on earnings and revenue. You could blow out the expectations like NVIDIA does every single quarter. That doesn't mean your stock's going to go up. Yeah, like it doesn't really matter. The stock can just respond to any little thing, or usually it responds to like revenue guidance. But even that, it's not a guarantee, So how you play earnings, don't play earnings, or just hold through if you're in it. Just you invest not based on an immediate earnings report. You just invest for the long term. But if you're going to play it, I don't know, dollar cost average, part of it in dollar cost average after the earnings, whether it goes up or down. But earnings is just a 50-50 crapshoot. There's so much data on this. You can get a subscription on optionslam.com, which is about playing options around earnings reports, but they have historical earnings stock reaction data. There's no edge. Like if you're playing the stock move, in my opinion. But anyway, so Micron earnings, the expectation is that they blow it out. That's so they probably will.
It's my expectation as well.
Yeah, let's see what happens. Maybe it just goes to 2 trillion. So $2,000 stock. Yeah, we'll see. But this has been a great compounder, and what a run this is. So we'll just keep holding for now. I think. All right. Before I get into the stocks, who else has a stock they want to bring up? Yes.
We talked about this a few meetings ago. USAR, USA Rare Earth.
Yes.
For those of you who don't know, right now China controls 90% of rare earth company, or like 90% of rare earth mining in general. The US is trying to change that. This is a pre-revenue company, but it's very vertically integrated, and the C-suite is looking really good. I don't remember them all off the top of my head, but you could do your research into them. Anyways, China has put some trade restrictions on them very recently, like within the last day or two. And surprisingly, the stock's actually gone up since then. So it could be that the market's kind of recognizing them as a more... They've been recognized by China as a realist, maybe not like a realistic competitor, but like there's something going on there.
Yeah.
They're saying, you know what, we're going to do something about this.
Would you say this is, off the top of your head, this is the leading American rare earth play?
In terms of it being vertically integrated, yes. In terms of market cap, no.
Okay. Yeah. So it's one of those things where it's like a scarcity angle in that because of them being the main US play, vertically integrated, they have stuff going for them, rare earths, which we are behind China in. And it's like that's the sort of what could like constrained, whatever, coiled spring thing where the stock could have a lot of pop potential, but again, pre-revenue. So,
Right.
so again, speculative, but yes.
The thing with this, is like looking at, I don't remember the tickers, but like looking at China's equivalent companies, they have to be vertically integrated.
Yeah.
Otherwise, they just get absolutely destroyed. Like, you know, going through however many layers of the supply chain. Like, it just doesn't work if it's not vertically integrated, which is why I really like this one. Another thing, it falls pretty well in line with the like Aschenbrenner thesis, like you know, the second order of effect of the AI scale. We need magnets. Like, that's eventually going to be a thing that we have to contend with.
Yeah, and while that Claude's going, I just want to say, like, and I've been bringing this up to people, especially after the whole like mythos thing. He talks about that sort of thing, how they're going to nationalize AI. If it becomes so powerful, the government will take control, and all this kind of happening on the timeline he estimated, maybe 2026, 27. But like situational awareness, this whole manifesto thing written in 2024 in the summer by this guy, Leopold Aschenbrenner, smart guy, former OpenAI employee, very connected to like their, you know, all the leading AI people, wife, fiance, chief of staff at Anthropic, has a hedge fund. It's been outperforming like crazy. It's up like 1,000% over the last 3 years. Now, basically, this is like the Nancy Pelosi portfolio on steroids with AI, but high risk, you know, but like he lays it out. He laid it out. I've been on this like since it came out, and it's just like, well, it's just math, and you know, it wouldn't go against what the leading researchers have projected in terms of the scaling curves. Now, this is long stuff. This is, yeah, again, talking about like the advancements in AI, how like, you know, GPT-2, ChatGPT, it's like a preschooler, then elementary schooler, GPT-3, baseline, GPT-4, smart high schooler, and then he sort of does it in what, orders of, it's like normalized to GPT-4. So it's like orders of magnitude in relation to that. And so now we're on GPT, what, 5.5, something like that. So what are we, like college PhD level or something in that, maybe PhD level. And then you get to 2028, maybe we get far ahead, right? So far, I think we've been in this ballpark, more or less. Maybe not with, I don't know, with GPT, but with Anthropic, with Claude, you add the other AIs in there and where we're getting in the AI scaling curves. And this is in line with the GPU tech, you know, Blackwell's, Mythos, Rubin's, which are coming out next year. SMCI just had news, by the way, they just had some PR saying, oh, we're ready to install Rubin's, something like that. But again, they're going to be at the forefront of that. So just follow the curve. Like, that's all I'm saying. So if you guys can dive into this and read through it and really like maybe use AI to assist you, read through it 50 times if you can, I don't know. But like crystallize this in your head. And I think you'll have a good framework of which to invest based upon for the next 20 years. Just saying. So that's, yeah. And again, there's been a lot of debate over Aschenbrenner because he's a kid. He's like 23, 24. He's young. But for me, I'm like, it doesn't. You look at, it's like what they're saying. That's what matters. He's got the background too. Graduated from Columbia at 19. He's probably a smart guy. I don't know. I'm just saying, like, you know, probably signals something, right? But anyway, like, yeah, so just follow what the smartest people and the leading researchers are saying and just invest based on that, you know? You don't have to be a freaking genius yourself. Just follow what the smart people are saying, you know? So if anyone can really get through this, dive into it, more people can get into this. I think people are catching on now, but it's good to just have this in your head because this is kind of the way we're going. So again, yeah, going back to where were we? USAR. So again, this is going to take lots of energy. It's going to take a lot, you know, the components, the raw materials. This is not just something where it just keeps going. It depends on the underlying hardware too. And then USAR is kind of like another thing right at the center of that. And another issue, yeah, which could be like a wrench. I'm not saying a wrench in the scaling curve, but again, China has what you said, 90%.
Yeah, it's 90-10.
Yeah. So if anything could slow us down, and I don't know to what extent how important these rare earths are for the hardware, probably very important. There's something there that China has a play on. So something to keep in mind. Yeah. But again, you can't, there's no way to sort of gauge it based on valuation because it's just based on like expectation of where we scale. Didn't the government also consider taking a stake?
Yeah, well, no, they didn't take a stake. They gave, like, it was a $1.7 billion deal. I think the vast majority was like a really, really cheap loan. And like maybe like 100 million, like a decent amount was they just gave them.
They gave most of it to MP Materials, I think.
The but they gave a lot to MP Materials. But the 1.7 billion was with USAR.
MP is a bit bigger. Also not that much bigger, yeah. So that's the whole play. Kind of like how Iron versus Nebi is, vertically integrated. Yeah, so just depends on what you're in. Yeah, I like vertical integration. I mean, that's a whole thing we talk about with our Teal and Camillo scanner thing, and just it helps with ecosystem monopoly building, which matters more than ever going forward. So it's something to keep an eye on, just in terms of how they're structured. All right, definitely on watch.
Sorry, go ahead.
John?
See this?
Trump seeks to boost quantum computing with new executive orders. Okay.
Today.
More quantum related. Are you still in IonQ?
In Rigetti.
In Rigetti, okay. So, yes.
So, orders coincide with billions of dollars in funding for quantum companies being awarded by the Commerce Department, and a private sector investment frenzy from companies including IBM, Microsoft, and Google.
So yeah, quantum is getting funding. Again, I'm not an expert on this. Some of you probably know better than me, but like, it's a question of, can you build a profitable or just sustainable company around this tech? And the tech is I don't know what the long-term use case is or the value add. I'm sure there's something if it works out, but again, this is highly, highly, highly speculative. This is something where, again, I've made my point clear. I don't touch this, but if you're willing to allocate a little bit, sort of like on a potential thing, tiny percentage, I think there's a case for that. But again, who knows? Probably takes a lot of funding. IBM might be the early leader. I think Quinn mentioned that one a few meetings ago. So we'll see. But yeah, this is just something where it's very, very speculative, and you either believe there's a chance or you don't. And at 20 billion market cap, okay, so this in 187 million in sales, and so it's not really this is not sort of like a USAR bottleneck type direct play. This is more of just a hyper speculative tech play. Sorry, it's my phone.
They are, but I'll tell you, it's a roller coaster. So last October, I invested into I think March and April. In October, I was up 400% on Rigetti and 300% on IonQ. In January, I was flat.
Yeah.
And now I'm up about 100% on each of them. So it's a big movement there.
So we had a big AI dip since fall 2025 into like early this year. And a lot of these stocks, especially quantum tech in general, just any speculative tech crashed a lot. And so it's kind of set the tone as in, at least yet. So again, we have these massive drawdowns. You see this, like from October, Rigetti was at what? It peaked at 58, crashed all the way down to like 12, So you're dealing with like 80% drawdown, 70, 80% drawdowns. Like that's very, very difficult to handle,
Well, I think it's better than your microcrep strategy.
Yeah.
Losing your butt in one day.
Could be, yeah. So it's just something where if you can stomach the crazy volatile moves, over that time frame, then okay. And if you allocate small, I think, yeah, we'll see. But again, lots of debate on whether actual profitable, sustainable, innovative things and companies get built out of the quantum stuff. It's just either you are in it or you don't believe in it. That's all.
Okay, well, you guys got a stock?
Oh yeah, I was gonna ask, do we have Robinhood in our portfolio?
Yeah.
Okay.
Yeah.
But we can double check, because I know they've been
Yeah, they've been recovering.
They've been doing stuff. Oh yeah.
But you mentioned the whole ecosystem for the rare earths, and I feel like Robinhood more and more they're less reliant on their mostly their crypto transaction revenue, and they're making all these moves to kind of get the young people in, and then just keep them there.
Yeah.
And it's worked.
Ecosystem lock.
Yeah, it's worked for a bunch of my friends.
Yep.
The Trump accounts. I feel like it's a really great.
Show of hands, who uses Robinhood? Okay.
It's a card tool.
Yeah.
It's great.
Yeah, and they're positioned for the future because as it's the demographics going into the 2030s, millennials and Gen Z. It's like they'll be the dominant ones to be catered to, and then Robinhood is well positioned like that over say traditional incumbent brokers like a Schwab or Interactive Brokers, which are fine, and they've moved to zero commissions too. But Robinhood's just kind of they probably got the research down on this too. It's hard. It was hard enough to break into the brokerage industry doing what they did. Now they got their foothold. Now they are building that ecosystem, vertically integrating, gamifying, locking people in, offering the credit cards. Now they have the AI agents can trade for you, and they can do purchases for you. Is Brian here still?
Yeah.
Have you used it or considered using it for? Did you say you were using it to also buy stuff for you or no?
So it is buying ETFs and stocks on behalf of me. I'm not making any decisions, it's making its own decisions, logging its own trades, and self-improving in the loop.
What about options? Wasn't it something to you could use your credit card too to buy?
Yeah, so here's the thing. One thing I have to say to the college people who are still in college, if you use Robinhood when you're in college, if you get a job at a financial firm and you're managing people's money, you are not allowed to use Robinhood. You have to switch to Schwab, E-Trade, JP Morgan, or some other big firm that are allowed to trade. So when I first joined JP Morgan, I had to switch to Schwab. And then I found out that my job doesn't require PDA. So I transferred all my money to Schwab, but then I reopened again because of the agentic account, and I'm now trading on it. I used to have a credit card, but I think what if my system is really good at the point where it's making profitable trades every time, I think I'm going to allow it to use option trades going forward.
Okay. So yeah, just more again, you're everyone's a data point. That's not a bad thing. It's just a thing, but we're getting locked in more to that, and they're just playing the right angles here. And so in terms of, and we talk about this again with our prompts and all that, they're monopoly building, they're monopoly building, and they're getting that edge. They are at the forefront of AI too. And I don't know if the other brokers are really that in tune with it to the degree they are. So something to keep, again, for a brokerage, high multiples, yes. High growth rates too. So again, speculative, and in a bear market, this probably has a big drawdown, but they're really making a lot of headway. And then not to mention, if this was something they kind of rolled out last year a little bit for Europeans and select customers, but the tokenization of private company shares. There's a whole demand for private company shares. And so if they can tokenize this and get around the traditional regulations, the whole accredited investor thing, then that's another new big market. Now we'll all be able to get SpaceX long before it IPOs. But then that could also distort the valuation privately, but who, people want it. People will get a hold of it if they could get the opportunity. So that's something to watch too. So they're adopting the whole blockchain angle as well. So there's a lot of good things going for them business wise, I think, and positioning wise. Yeah. And yeah, it's great holding in the portfolio. And we'll just keep holding on to it because nothing about the thesis has changed. Even if the multiples are a little high, it's fine. Any other stocks?
I want to talk about Oracle. Recently I saw news that there's the amount of the neo cloud that they have to provide to their customer is bigger than their market cap, which I believe it was around $500 billion. So the demand for the cloud and also these semiconductors for these data centers are so incredibly massive that all these semiconductors companies, infrastructures, and all of these AI plays, and I think it's going to continue for the next 2 years at least. So therefore, I made a decision to sell all the hyperscalers because I believe all the CapEx are going to be going into the AI players, infrastructures and semiconductors.
Neo clouds, et cetera, things that will benefit directly from that sort of stuff. That's fair, I think.
I'm personally just finding stocks that are going to 10x within the next 2 years.
Yeah.
I think there's going to be a lot of opportunity and a lot of people are going to miss if we don't research well.
Yeah. So it's the bottleneck stuff. And we've been talking about this. Al was trying to find the next bottleneck. And actually, if you see the recent Gavin Baker interview posted, it's that TBPN podcast, which is now owned by OpenAI. But he says he thinks the bottleneck, finding the next bottleneck is not really the play anymore because now everyone's just trying to do that. So what you need to do now is focus in the existing areas. For example, your neo clouds, your third-party data centers, and just like figure out, okay, who is primed to lead this area? Like who's going to make a viable, sustainable, good business out of this? And I think that's really the play. Even if they've run up a few 100% or something, like this is sort of now we got to focus on like, we're not just playing some overall sector industry trend. Now we got to dig into the individual companies and see who's like stands to benefit within that sort of thing. So
I think Tesla and SpaceX is going to benefit a lot from that. I think Elon is going to shoot a lot at, you probably know more than me, Eric. I think he's going to shoot as much as satellites as possible, and I think that's going to cost a lot of chips.
Yeah, I mean, well, if SpaceX pulls off the whole orbital compute thing, that throws another like whole, like we talk about terrestrial data centers, now we're talking about like space data centers. And then if that's the new thing, they pull that off, and it seems like the physics makes sense for that. And even Gavin Baker believes within 5 years. So we'll see. Elon says 3 years, probably within some amount of time, but it's just GPUs in space. Yeah, I think it could be done. And then takes care of the cooling problem since it's like absolute zero in space. Just a matter of the laser transmission back, but I think they can figure it out. But again, the demand's so high, I think there's just going to be need all around for that. But again, it's like who's going to benefit in terms of infrastructure players, who's dealing with the atoms and not just the software. So makes sense. Anyone else have stocks you want to bring up? Yeah.
So when we talked about Robinhood about 3 months ago.
Yeah.
That's a wonderful idea. And I brought up Goldman Sachs, which is what I'm into. So I watched that over time, and for the next 2 months after we talked about it, Goldman Sachs completely outperformed Robinhood, and then the last month, Hood went straight up. So but their high is much higher than where they are now in the last 12 months. Yeah. So I'm considering taking half off the table at Goldman and going into Hood.
And your reasoning is just based on stock performance?
So, well, no, I think long term, I think you're all right. It's a more younger, innovative company.
Yes.
Probably has a lot less exposure to, the money that's been loaned out to, because Goldman's a market maker and, they do a lot of VC stuff.
I think, so Goldman's interesting. It's and I know they've tried with the whole Marcus thing, and that didn't really get off the ground. They've tried to sort of, cater to more retail clients and stuff, and because, there's only so much market share you can take in certain aspects of finance. But I would say, and again, it's different. It's a traditional, valued like a traditional financial firm, low multiples, that's pretty normal for that, pays a dividend, pretty normal for that. Yeah, as far as doing what Robinhood does or getting into that, yeah, I don't know. And I think Robinhood, their positioning is better, but they don't overlap too much. I will say though, who was handling SpaceX's IPO? Goldman Sachs and Morgan Stanley. So in terms of investment banking services, they're still at the forefront. And again, in investment banking, name, prestige, all that stuff does matter. And it's going to keep mattering. You want Goldman Sachs handling your stuff. You don't want H.C. Wainwright doing your stuff. But so you want Goldman, you want Morgan, they're going to have the connections, they're going to have the network, et cetera, et cetera. So there's always going to be an angle for that. So they're not going away anytime soon, but in terms of, yes, stock growth potential, you think about relative market cap, Goldman at 326 billion, Robinhood at, say, 95 billion. Okay, well, third the size, but still, Robinhood, just in what they're doing. So it's what you prefer. Goldman is more of a traditional value play. They do have businesses that I don't think will be disrupted anytime soon, like investment banking services. But yeah, it's just by preference. Lower risk Goldman, higher risk Hood, more growth potential Hood, more, monopoly building potential maybe Hood. So yeah, whatever your risk tolerance is. But yeah. Any other stocks people have? All right, I want to bring up some. Just found out about this one this morning. I was running it through the Claude. ACM Research, just another, I think, bottleneck player. Semis, 7 billion market cap. What's interesting is all their business operations are in China, even though they're based in the US. They seem to be more innovative in whatever aspect of semiconductors. They have a founder CEO, scored high on Teal Lynch Camillo. I would just say now the risk is that China decides, hey, you're an American company, we don't want to do stuff with you, we'll cut you off. Yes, seems like they're ahead of China's nearest player who is trying to sort of compete, but whatever aspect this is, they're in the lead. I'm just saying, if you want to play something speculative, mid-cap size, 7 billion, you look at the total addressable market. I told it to take in the Aschenbrenner situational awareness thesis. Assuming the scaling curves hold up, what could this get to? And it's probably a $30 billion company within, 3 to 5 years or so. It's you could get a nice compounder out of this within a medium-ish long-term time frame. So that's just another, semis bottleneck player. I'm not too familiar, again, with every aspect of this, but just that one jumped out at me. So again, this is the whole thing where it's now we're looking at who, even though they've run a lot, who is going to benefit, who has the business positioning for the future, and what stock is primed to sort of compound within 3 to 5 years, something like that. So that's one. I want to let Claude do its thing there, but Victor was bringing up this one, I think. Vive Health Information Systems, it scored really high on their thing. Very low multiples. So in terms of a value play, kind of similar to a BMRN, just very cheap and just kind of cash cow. So from that perspective, low risk, if, again, this is more just a healthcare trend going to the 2030s, demographic play. This is taking a while, so let's dive into Vive. On this one, on ChatGPT and Claude, still taking a while. Oh yeah. And I've been looking into, because our portfolio is kind of like, it's about full. I mean, we're about fully allocated here. So the question is, do we want to replace stuff? And we're kind of in line with the QQQ, the NASDAQ, which is good considering that's just been running gangbusters with the AI plays. And you have to have captured a degree of the AI trade to have actually like beaten the S&P or perform well in this market. It's just the way it is. But we've also been hedged. We've had OR, which is non-correlated really with the S&P, has short exposure. You know, I mentioned in the last email, it has Japanese nets, it has just other deep value plays. And so we're kind of exposed there, but we do have our high beta AI infrastructure stuff like ASML and Micron, et cetera. I'm thinking maybe we can replace Mosaic since we have 2 fertilizer companies. Mosaic's more of a slow moving incumbent. We could probably replace that with something in healthcare again, like a Vive. So just questions for that. But again, just as like, if you want some alternative thing to AI and bottlenecks and everything we've been discussing, maybe good to look at healthcare, you know, just healthcare cash cows. Doesn't even matter so much what they do. Just cash cows in healthcare primed to benefit from the coming demographic trends going in for the next 5 to 10 years. So
I'll be on for that.
Yeah.
We're into BTSG.
BTSG.
I've been in them for about 1.5 years now.
Bright Spring Health Services as well.
That's the one.
It's a nice steady grower.
Yeah.
Higher multiples, but high growth rates. So what's their angle? Or it's just another healthcare
Provider, but difficult cases and in hard to reach places.
Yeah.
So Tennessee, Kentucky, mountain areas.
Gotcha. So that's sort of I wouldn't say monopoly, but that's like a sort of scarcity, like, you know,
Right.
There's a differentiation aspect there. Interesting. Very interesting. So yeah, I think it's good to look at healthcare. Prime to get some run. I think, John, you mentioned HIMSS, like it's showing some, again, more of a speculative one. We're all in HIMSS. We've been sort of bag holding HIMSS, but maybe it's time with the whole peptides thing and all what they're trying to do. So I think it's good to look at some of these other sectors too, that might have potential. Yeah. Anything else? It's almost 8 o'clock. So, all right. I think we should end it right there then. All right. Thank you for showing up. Thank you for staying the whole time. I know it was a long meeting. So some of us, you're welcome to meet for dinner